You know, if I were an American out there and I'm looking at all the news and media about what's going on in the globe as it relates to oil and gas, all the hype, all the tidbits, all the bites, all the Snapchat, all the so-called pundits and experts giving us information what they think is going to happen to energy prices, I would think I don't need to hear anymore. I've got all I need. But how about a real question? Has anybody asked for a panel discussion with the top 5 oil and gas producers in the United States? I mean, we are the number 1 oil producer in the world. We produce more than Saudi. We produce more than any other country on the planet Earth. We also consume more fossil fuels than any other country on planet Earth. It would seem to me, absent the Strait, absent the Iranian war, how does U.S. oil and gas companies perceive the oil market going forward from today's mess in the Middle East? Because it is a mess. I mean, I understand the logistics and the logic behind the Iranian war. I get it. I don't have all the information to know why it happened today, why they had to feel the need to go forward, but I always support our country. I always support our troops. But I would be asking today if that situation in the Middle East in the Iranian war is going to cause a supply disruption where the backside of that disruption is accelerated inflation, accelerated cost of energy, and a really big shift in terms of the economics going on in virtually every country in the world, I might stop and say, wait a minute. Let's go find out what's happening in the number 1 producing country in the world, the United States. Let's go find out from those who've been in the business, understand the business, and what it means to them when the president says, drill, baby, drill. Now, I've touched on this before, but I'm going to give it to you from what I consider to be a guy on the street. We have our own rig. We're drilling our own wells. We own thousands of acres in minerals. Been doing this for 40 years. To know from the guy that's actually changing out the locks at the front gate all the way down to the boardroom, what's really taking place. And I'll tell you what I think is taking place. Oil companies have been beat on the head for a decade. Save the earth, hug a turtle, kiss a tree. We've got alternative energy, fossil fuels destroying the planet. Everything you can think of has been laid in front of us like landmines. The industry recoiled back in 2018 and said, okay, time out. We're going to take the beating, but we're not going to do it again. What we're going to do is we're going to compromise less. We're going to divest assets that are not top tier. We're going to restructure our companies. We're going to buy one another out, and we're going to hunker down like it's a fort. And what we're going to say to ourselves is we can't count on Wall Street. We can't count on the White House. We have to count on ourselves for growth, for finding reserves, for exploration, for cash flow management, and for everything that we do, absent borrowing money and trying to get shareholders to agree that fossil fuel companies are a great asset to own. We're going to have to do it ourselves. So we have, ever since about 2014 or 15, when President Obama was still in office and was anti-fossil fuel. So what does that mean today? Well, we've been on a diet. We've been used to not having ice cream with Blue Bell and Oreo cookies. We've been used to living on whatever cash flow comes, whether it's $55 a barrel or $105 a barrel. And we're not too quick to the trigger. If an Iranian war breaks out and oil jumps from $66 a barrel to $110 a barrel, we say, well, that's good. That helps add to our cash flow in 3 to 4, 6 months, but we're not moving. We're not going to go get rigs and dress them up and fix them up and put them back into activation. We're not going to go borrow a bunch of money like a bunch of drunk sailors, right? Old saying, no offense to the military. But at the end of the day, what the oil and gas industry is saying is we're looking for some consistency in the runway ahead. We're looking to find out from what we do, does it make sense to us as a company, as a private enterprise, on behalf of our shareholders and our partners? Now, the industry itself, it took a beating the last 24 months. Service companies were doing services for 25 to 40% below cost from 2024. Everyone took a reduced price, reduced service, and the oil companies, to offset the decrease in commodity prices, said, okay, all of our service providers will get us services, equipment, goods, materials at a much lower price. That makes it better for us to drill and maintain our cash flow. And what we're going to do is we're going to take every single intellectual asset we have, every engineer, geophysicist, production manager, drilling superintendent. We're going to figure out the very best way to do business and extract the greatest level of production for dollars spent. And we're going to manage it, we're going to watch it, and we're going to get high density drilling. And we're not going to play the game of drill, baby, drill. We're going to play the game of prudence, efficiency, consistency, and long-term thinking, not drill, baby, drill. Today, where the U.S. oil and gas industry continues to exceed and continues to lead the world in performance, is every single aspect of our drilling gets better and better and better. Because we know, as a self-sufficient, self-sustaining industry, no one's coming to our rescue. In fact, most consumers and most politicians love it when oil and gas companies are barely making a profit. In fact, they like it when the companies like big companies go out of business. They say, well, they deserve that. They're still going to produce oil and gas because that's what they do. And we want them to give it to us as cheap, almost at cost or below cost every single day, because when oil prices go up, nobody wins but those greedy oil and gas companies. But when they need us, like today, when supply is short, they're like, why aren't you guys getting those dormant rigs back into activation? Why aren't you getting those staff members back out drilling? Why aren't you spending more money? You're getting more money. You're having higher prices. Your revenue is going to be up by 20, 30, 40%. Why aren't you spending the money? And the answer is because we don't know the next time you're going to try to starve us out. We don't know how long we can rely on the price. We don't know how long before you look in our basket and say what we have in savings because of the short-term windfall is in your basket from windfall profit taxes or other ways that you can recoil or get back the gains we make in a temporary commodity situation like we have today. So today what I've seen is we're getting diesel fuel surcharges by everybody. We're seeing frac crews and completion crews in high demand. They're raising their prices because everybody wants to frac and turn wells on today to capture $88 oil and $3.25 natural gas with expectations of probably higher prices for longer. What we want to do as an industry is we want to take advantage of the current cost of drilling, because if oil goes to $100+ a barrel, every service provider is going to ratchet up their cost because there's going to be higher demand, less services, and that's called economics 101. What we're seeing today is the majors have bought each other out. So you probably have 200,000 very skilled intellectual assets that can't have a job, don't have a job. What you're seeing is shortage in equipment. You don't have 100 pump jacks in the field. You don't have 500 tanks sitting in the field ready to go. What you have is people backing up to the fabrication business saying, I'll take that tank now and I'll be back for 10 more over the next 2 days. What you have is literally a zero spread between functional application in the field versus expectations of an inventory for any kind of growth. We couldn't ramp up if we wanted to today. Somewhere, somehow, whether it's the White House, the market, the industry, has to give the oil and gas industry in the United States some level of confidence, taking a risk, creating a higher capital budget, spending more money, and reactivating dormant rigs makes justifiable economic sense to us and our shareholders and our partners. Today, it does not. So the U.S. reality is very simple. We're going to keep pumping out 13.7 million barrels a day. We're going to drill our very best locations because we need the very best location to make economics work. We're going to take this extra windfall that we have and make sure we have plenty of cash for next year if the price of oil falls back to $66 a barrel. We are playing defense, not offense. And if you were in our shoes, you'd do the exact same thing. So today, I would not expect the oil and gas industry to come to anybody's rescue. I would not expect us to try to offset the supply disruption in the Straits of Hormuz. I would expect exactly what we're doing. Stay the road, stay the path, drill your best wells, drill them as well as you can, with the greatest technology you can, put the wells online, and continue to redeploy capital as you see the actual green, crispy dollars in your hand. Nobody buys promises, nobody buys politics, and nobody buys rotation when the White House changes hands in 30 months. We believe you have to have a 2 presidential term investment. That means we have to get past President Trump, the next president, and whoever becomes president in 2028. That is the way the oil and gas industry is looking at the world today.